Alright guys, making another video on flushes. This one is going to be less in-depth and really straightforward to the point. I don't know why you guys haven't watched my previous flush videos. Some of you are still asking questions about, what is a flush? How do I play a flush? Somebody asked if they could buy a breakout today on ATER when the plan was to buy the flush down here. So there's a lot that we need to go over. Obviously, there's a ton of misconceptions here. And it shouldn't be that way. I mean, I have, the classroom, we have Kev's videos, we have Kev's rewind, we have, you name it, it's there. So anyways, let's go ahead and take a look at what I'm talking about here today. And let's look at ATER on the pre-market watch. Let's look at ATER on the daily watch list. And we'll see that the plan was all laid out here. Our entry was 510, under 510, a flush. So what this means, what is a flush entry under 510? Okay, well, we see that the price pre-market was in the 520s. If we want a flush entry below 510, we're going to wait for the price to come below 510. Let's set a level on the chart at 510. We're going to wait for the price to fall below 510, and we're going to get a starter. Now, whenever you're starting out, a good starter size, find the max planned size that you were willing to take for this, particular trade. 25% of that should be your starter. That's a good little basic, it's a good starting point if you're new to this. So you get your 25% starter in here, right under 510. Say you get in around 508, whenever you got in, 505, whatever. Then you want to scale in on sizable dips, not penny dips, sizable dips where the averaging down is actually going to matter and actually going to help you. So if you are in at 505 and it goes to 504, you're not going to add on the dip because that's not a sizable dip at all. It's really not going to make a difference with your average. But if you get in at 505 and you get a dip to $5, okay, maybe I'll add another 25%. Now you have 50% of your planned position here. Then you get a dip down to 495. You're like, okay, maybe I'll add another 25%. Now you have 3/4 of your planned position here. And keep in mind, risk here was 490 on the watch list. And you'll see that we actually dipped below risk here. So depending on how much you scaled in here, your average was probably around 497, 496. And you would have stopped out 490 for about a 1.5–2% loss on that first entry. Now, with these flush entries, you'll see that our risk was 490 and our flush entry was 510. So if the price does break back above this risk level and show some strength, and it's not above this flush level, it's still a possible, opportunity for later in the day. So you'll see if you go to sub scalp alerts, I alerted ATER for entry at 1034. And you'll see that we saw buyers come back in here after this dip below support. Buyers bought it back up, and I alerted entry this time. Scalp idea 492. Now that was very tight risk considering our first risk was 490. This entry was 492 on this pullback right here. And we were risking 484 on this entry. Now why 484? Because that was our daily level of support here, as you can see. So we had our 484 support. If it held that, that would be considered a high or low. And that means our plan was validated from there, if that did hold. So from there, you see I alerted dip ads at 490 because that was a key level. We had 492 for our starter, 490 for our dip ads, and we went from there. Obviously, our first target was hit at $5. Well, what does that mean? That means under that $5 level, you should have probably taken off 25% of that position, if not more, considering that was a very, very crucial level at that 5 psychological zone there. You see my targets on that entry, it was 520 plus. So what does that mean? It means you would have scaled out some below $5 because that $5 is a key level of resistance. You would have scaled out some below 520 here. And of course you're going to scale out small on the way up, but those key levels are where you're going to take off, the larger portions of that position. So you're going to take off small amounts on the way up while taking off larger portions under those key levels on the chart. And then if you look at the daily watch list, you'll see the key levels were 530 and 550 as well, so you can also add those to your chart. Most of this is mental for me, so I just kind of keep it in the back of my head. But you'll see that pretty much all of our targets were hit here from that entry this morning. And risk to reward in this trade from our entry at 490 something was actually about either 5-1 or 6-1, which is, an A+ setup in my book. So I just wanted to go over this really quick. That was a simple flush play this morning. A flush is literally just a pullback entry that you're going to scale into on the weakness. You're going to scale into the weakness, scale out into the strength. So scale in on red weakness. So weakness here, that would mean low volume pullback. So there's low volume sellers here. It means not that many sellers. And then once your buyers start to take back over, you're going to sell to those buyers. So you're going to buy from the sellers, sell to the buyers, so long as it fits your plan. So I hope this video helps, guys. I don't want to see any more flush questions. This is going to be in Kev's videos, in Kev's classroom, all laid out there for you guys. Hope this helps, and I will see you guys back in the room.